Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 2nd of May. All right, now as we just kick off the start of the Asian session, the key thing obviously to look at, the biggest event in the market was the FOMC meeting. Now, no real change in any sentiment, in my opinion. Okay, the major currency pairs now are completely diffused. I know some of the majors, and I'll show you the charts in a second, have whipped back into the range. And it looks like the US dollar is rallying aggressively, but it's not. Okay, so it's all about understanding the perception of what's going on and putting it all together. So the last session, the North American session was very interesting, right? So the ADP employment numbers. Now this is the first number off the rack. Now this number used to be inconsequential, but these days, if it's got big variance, it can impact. Now the number's really strong, showing almost an extra 100,000 jobs than was forecast for the last month. Now that's a dollar positive. Then you come down into the ISM manufacturing numbers, and they were weak. Okay, significantly weaker. Which is a dollar negative. So you got push up, then an hour and a half later, a push down. Then you come into the Fed meeting. Now this is the core event for the global markets, not just for the US market. So no change in rates, no real change in statement. The press conference was very interesting. And what we did have a situation is Jerome Powell has come out very clearly. Once again, I think he's done an exceptional job just basically really calming the media as much as the market. US Fed sees no strong case for hiking or cutting rates. He did mention very specifically that inflation, that the various things that were impacting inflation may be temporary, which means, inflation could pick up again, no chance of cutting rates. At the same time, he's quashing any chance of a hike. So basically, we're back to a situation where the market is adjusting almost the media's expectation for a cut in rates. Now, don't forget the media, they want to drum up as much drama as possible. The Fed chairman is diffusing that, and it's actually giving the currencies it's steadying the US dollar for that matter, but it's not doing a hell of a lot for us with trending markets. What that's done is it's really, the US dollar may look like it's rallying, is what I'm getting to, but it's actually not. If you have a look at these currencies now, the Aussie, let me just make that a bit thicker, the Kiwi, okay, you get these pairs, Euro and Sterling. Take Sterling out of it, right? Brexit, UK Prime Minister Theresa May has come out with some positive comments. Looks like they may be getting to some Brexit breakthrough, but don't hold your breath on that one. That could be anything. So Euro, Aussie and Kiwi, now they have been trending lower. Those central banks have been erring on the side of caution, either slow domestic growth or slow global growth like the RBA has been talking about. I would forget about dollar yen. It's just trading sideways, as is dollar CAD. They're too hard as well. So when you're looking at the major pairs, you're like, well, the dollar has rallied. Yeah, it's rallied, but it's moved about 20 points. And it's more of a knee-jerk based off the media, what the media has built up there about, there's no chance of a cut in rates. It's like, well, that was never a bloody chance anyway. Yeah. Okay. So what I'm trying to say is don't get misled into thinking the dollar is rallying here. If I bring you back to the sort of the main dollar page, if I get up you get the gaps here in the dollar index over Easter and all sorts of stuff, the bit of a futures price. So you can see the dollar index here, it's rallied, right? That's basically because it was under pressure because there was an expectation of some sort of weird inkling that they may come out and be a little bit dovish. That's been corrected, but it's basically straight back in the middle of the range again. So there's no need to get excited at this point. What we need, right, from this point on, we need some fresh data to really give the dollar direction again. So the Federal Reserve meeting, it clears the air and gives us direction, right? Funnily enough, on this situation, the Fed chairman has come out and said there's no chance of a cut, there's no chance of a hike. So we're really diffused the dollar in my eyes. Now, it's really going to come down to, there's a couple of other things brewing here, and it's down to these geopolitical events. And I think the Chinese-US one is about to sort of kick off. And from the news out there at the moment, it looks like it might be quite positive for China. The US look like they're going to drop some of the tariffs, and they are going to come to a deal and move forward. So that should be good for the for the whole situation. That'll take that off the table. It should be positive for Aussie and Kiwi and the Yuan. Brexit, just let that go through to the keeper. There's nothing to do there. So when you're looking at the major pairs, we are waiting once again for these pairs to light up. The dollar, yep, to me, it's neutral. And there's no chance. Like, we've seen a small knee-jerk reaction here on the charts, but that isn't enough to really get me excited into going long or short dollars, because it hasn't really gone anywhere. These pairs down here, fundamentally, okay, the fundamental outlook is not going to change day in, day out. What we're waiting for is opportunities where these specific pairs that do have clear direction. I'd probably take dollar CAD out of it now. It's such a mess with oil moving all over the place. You got the US fundamentals and being diffused by the Fed chairman. Then you've got the local domestic Canadian fundamentals all over the place. It's just a dog's breakfast. So we're looking now for the upcoming events. Is there anything here that's going to give these pairs over here some sort of clear trading opportunity? Well, once again, because of Brexit, we've got a bunch of UK stuff coming out here, and the Bank of England, probably, up there, the three big central banks, the Fed, the ECB, and the Bank of England. This is probably off the table once again because of Brexit. There's nothing the Bank of England can do whilst Brexit continues. They can't start changing policy because there may be other ramifications if Brexit works or doesn't work. So that's where they are on that. It's a bit of a lockjam. So then you come down to having a look across the board here. Now, we have got the, I like the look of this CPI flash estimate. If we can get some, we've got to wait. This is on Friday, mind you, the CPI flash estimate for the Eurozone. If that's weak, well, then I'm going to be very happy to be getting short Euro, but we have to wait for that. Now, to get all these currencies back get their mojo going, we need a big US dollar number. And we've got probably the biggest, well, actually the crankiest, the non-farm payrolls on Friday. Now, this is, and I can already know that this event is almost untradeable. There's 3 or 4 different variables coming out. You've got the non-farm change, the participation rate, the unemployment rate, the average earnings, and there's a few other variables in there as well. So when you come down to look at the non-farm payrolls, if you see someone out there say, oh, I trade it and I smash it, yeah, right. Well, I'd love to see that because it's so loose. The volatility will be there. Of course, if all the data lines up, well, then we get a good clean move, but it's very rare that happens. So really, we're waiting for the non-farm payrolls to really get stuck into some of these pairs. Now, to me, strong US numbers, that's the big trade here. But now that the Fed Chairman Powell has come out and said, well, we're not cutting rates. He's also mentioned we're not hiking. That was always an expectation, but we're not cutting. If we get strong numbers now, these pairs down here are going to light up. Euro, Aussie, and Kiwi should race to the downside, and that's probably where the cash is. So right at the moment, to me, it's a wait-and-see situation. And don't forget, when the US non-farm payrolls come out, you want to be looking, and I'll be covering this tomorrow, the main thing you're looking for is technical levels on those majors, which we don't really have many on the downside for Aussie, Kiwi, and Euro. But you're probably waiting for at least, you want to see all the numbers come out and see get the volatility out of the market, which will take about 20 or 30 seconds, and then look for opportunities. Right? It's going to be a little bit tricky as we run into the end of the week. For those traders who are desperate and dateless, yeah, by all means, have a look at the sterling. But you know what? The main mover of sterling, you can't see it. It's Brexit. It's politics. It's behind the scenes. It's random updates. So I don't think you're going to be getting too much out of the Bank of England just yet. In saying that, if Carney does come out and say something weird, well, then we may get some volatility. But which way does it go? I don't know, okay, at this point in time. So that's it, guys. So when you come back to look at your charts, I know this is a little bit long-winded, but just wait for the opportunities. Now, right at this point in time, I'm not extremely dollar bullish, as in US dollar bullish. I think these currencies will trade sideways until we get some more data. This is like a slight knee-jerk reaction. They are all still in the range. Obviously, sterling's gone a little bit higher. The rest of these pairs are all trading sideways, and right now it's a wait and see. Okay, maybe a chance for a bit of a range trade on some of these pairs, but don't forget the other major news event that is coming up which will be, as I said, will come into play very quickly, is the US-China, right? This thing has been simmering. I think Trump has got China where he wants them, and they're doing a good deal for China, for the US, I should say. But it should also be a good deal for China. That'll take a lot of the global growth worries off the table from a lot of central banks, and we could start to see some normal activity across the board. And then all we need is Brexit sorted out, and we're back to normal markets. That'll be a breath of fresh air. All right, guys, that's it from me. Plenty to go through there. Don't get too caught up in what the Fed's done. Just have a look what their sentiment is. It's pretty neutral. We need the US data to kick in. And unfortunately, that's not till Friday, the non-farm payrolls. And that's almost too aggressive for us to really rip into. But we will hopefully get direction from that event, and that'll make trading easier, if not the second part of Friday or next week. All right, guys, have a good one. We'll see you in the 247 trade zone. Cheerio.